You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program where we break down the intricate, arcane, some may say scary, some may say just fun world of crypto, all of the assorted products. So we got the spot, we got the OTC derivatives, all sorts of fun stuff, the futures. It's a fun time. Glad you can join us. My name is Mark Longo from theoptionsinsider.com, the brand spanking new, I should say, theoptionsinsider.com. Hope you guys have had a chance to check out the new, a lot more than this, a new coat of paint up there, a lot more fun stuff lurking underneath the hood. Click around, kick the tires, light the fires, let us know what you think of it. You find something that's not working, because whenever you fix one thing, 5 things break. Let us know. We'll make sure we get on it right away. But check it out. The shows are front and center over there now, so it should make it even easier to find all the good stuff that we're doing out there. And of course, however you listen, live after the fact, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do indeed like to hear from you guys. We got a great guest lined up for you today on the Crypto Rundown. So without further ado, let's get right to it with the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, it's time for the Crypto Hot Seat, where we welcome on guests from throughout the world of crypto and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. Our next guest is a newcomer to the program and indeed to the network. He is David Nuelle, the managing director over there at Hehmeyer Trading. David, welcome to the Crypto Rundown program.
Hey, Mark, thanks for having me. I really appreciate you bringing me on.
And David, as we were wont to do with all of our first timers here on the program, why don't you go ahead and give our audience a little bit of an overview of your background in the financial markets, as well as what the heck it is you guys do there at Hehmeyer.
Sure. So I'm an old futures industry vet. We
don't say old, we say experienced. Seasoned.
Seasoned. That's right. I started trading options on the floor of the Mercantile Exchange in 1987 in the Deutschmark option pit. Moved over to London on the Life in 92, started a company called Helios, a company that evolved into Helios, moved back to Chicago. We sold that company in 2000, took a couple of years off, got back into it, mostly from the investment side, where we created a fund, ran the fund successfully until 2010, and then moved over to Hehmeyer shortly thereafter in 2011. So I've been around for a while. Recently got into crypto about the beginning of 2018, and have loved the ride.
I understand we may have crossed paths back in the dark days of the SPX there in the go-go.com 90s, when it was madness and the pit was expanding by leaps and bounds, and they were fun days out there, if a little fretful sometimes, Dave.
always fun days in the SPX pit. So.
Well, David, I like to, every time I have someone on like you who comes from a more, let's say, traditional or indeed an options-oriented background, I always like to pick their brains a little bit. Everyone has that moment, right? Everyone has that moment where they got to, I often say they got lured to the dark side, but whatever it was, the eureka moment where you said, hey, maybe there's something there in these crypto waters that's worth exploring. What was it for you guys? What really is it that kind of interested you in this whole kind of burgeoning asset class?
Well, I was a doubting Thomas early on. At the time, my son was telling me about crypto. This is quite a while back now, and hey, there's this Bitcoin thing you really should look at.
I bet you wish when you listened to him back then, huh?
Oh,
you bought a few and it was a fraction of $1 or $2.
Oh boy, do I ever! So, I didn't believe it, but I didn't believe it, and then when Ether came along, I really started to take a hard look at it, and the premise of Ether made me see kind of the bigger picture. Bitcoin seemed a little abstract to me, and that, of course, that was about the time I was taking off, so I took a harder look at it. And there was that moment, that epiphany, where you realize that there really is something here beyond just an electronic code that's being sent from place to place. And so, for me, this is the architecture of a digital economy, and that to me was the epiphany that made me understand how important it was to develop this technology.
So it was the core mechanics of a product. It wasn't a price action or anything else along those lines. It was the actual, and it wasn't Bitcoin, which is interesting. I think you're the first person to tell me that they got lured to the dark side by ETH. That's kind of interesting in and of itself, David.
Well, the concept of the smart contract really resonated with me personally, mostly because I missed out on the whole internet boom, probably. But the idea of a technology on a technology was really appealing. And I did understand how you could build a business on these technologies: smart money, smart contracts, et cetera.
And since we're talking here about the crypto space and your fascination with it, what is it you guys trade? Is it ETH? Is it Bitcoin? What do you guys trade over there at Hehmeyer?
We trade mostly the top 5 or 6 currencies. Typically, those are positions we'll have on. We look at a lot of the other tokens, a lot of the other projects. I have particular interest in some of them. For instance, BAT, Golem. The Brave project is great. Foam is another token that we look at. I particularly like the proof of location tokens, and those are not really well known by a lot of people who are out there, but is a particularly interesting subject to me. So,
would you say you guys trade more in the altcoin then than you do in the traditional Bitcoin and and everything else, or?
No, I wouldn't say we trade a lot of those coins. I'd say we pay attention to them. We trade mostly the top 5 or 6 as coins that we trade at Hehmeyer. So,
and what's it like? Obviously, you're like I said, a seasoned options guy. I think you guys, obviously, the crypto space, not a lot really going on in the options world. There is some, obviously, OTC and other things like that, which is kind of interesting, and on some platforms like the Deribits and the BitMEX and others. But it's still not the lion's share of the volume, obviously. So I'm curious, what's it like for you? Going from primarily an options background now to crypto, which is predominantly more on the Delta One side of things.
Right. Well, I'm looking forward to have a central counterparty that will clear options. Let's put it like that.
Yes,
right,
that would be nice.
So I do keep an eye on the option space. Delta One, it's a different type of trading. Obviously, you have to be much quicker in and out of things, and you have to be careful about your risk. Options, of course, are inventory driven, so you plan them out in a kind of a different way, and you're looking at different strategies, but typically you'll hold them for a longer period of time. Delta One, you're looking at fairly short, discrete bets that you put on and off, and so it's a different mentality from that perspective. But is there one better than the other? I'm not really sure. Again, looking forward to the intellectual challenge of options. There'll be something on a broader community than exists now.
Are you guys waiting? I'm curious, what is it that keeps you out of options? Is it just the liquidity isn't there yet, or are you kind of waiting for more listed products? What is it that's keeping you out of the option space right now in crypto?
Right now, I think it's for us. It's mostly the listed products that's keeping us out. We don't, I don't think the market is developed now to the point where we feel comfortable taking the other kind of counterparty risk that we'd have to take to put on large positions. And so, and who knows how it's going to develop. I'm sure that options are going to develop in a way that you feel safer having them on and having them risk managed by someone outside of, an unknown entity. And so I'm thinking, that this is, and I think this will evolve probably within the next year or so. There will be a listed options market of some type, either on ETFs or on the CME or somewhere else where we feel comfortable trading. So
someone's got to do it eventually, right?
Yeah.
Especially with all the volume we're seeing going up over there, and of course the recent run up, which is interesting. Obviously, this has to be an interesting. We have good timing getting you in here today. We're seeing some interesting movement in the Bitcoin. We'll get to all of that. What's going on today and this week, of course, in the Bitcoin breakdown segment a little bit in a couple of seconds here. But I'm just curious for you. The last couple of months, it's been an interesting year pretty much when you're talking crypto. We came into the beginning of the year, everyone was talking, I think, boring from Game of Thrones, crypto winter. We saw the longest protracted bear market in the space. A lot of negative headlines. Is it going to break 3,000, 3,500, all these things? It was a lot of negative interest, especially going into Q1. Towards the end of Q1, we saw that worm kind of turning a little bit, and certainly it has over the past month and the past few weeks in particular. I'm curious, you guys have been out there trading it pretty aggressively. What do you think has been driving this recent turnaround here in the broad crypto space? And is it kind of a little bit of an aberration, or do you think this is the new regime we're in here, a little bit higher levels?
Well, almost to a person, anyone I know in the space took the look at the chart from NASDAQ in 2002 and overlaid it against the Bitcoin chart. And they said, when it gets to this point, I'm going to buy it. And so I think there's an ambient bid under the market. Not necessarily, we see it a lot from all types of different institutions and people and small counterparties and large counterparties, but there's been a lot of money sitting on the sidelines. So that's created a kind of again, an ambient underlying bid. When it got to 3,000 or whatever the low was, 3,100, depending on where you look, I think that was a kind of a wake-up call for a lot of people to get in. And since then, it's been pretty straight up. I think the last week, I think so you have this ambient bid. There's been, it trades a lot on sentiment in my mind. And so obviously consensus, coming into the week, I believe the market was trading about 6,000 or something, and you had this huge spike up to 8,000 very quickly over the course of the week. Whether or not that had anything to do with consensus or the sentiment around consensus, I don't know. But my suspicion, it did. And then you have also what I would say another driver. There's a fairly small door for a lot of people to go through. So when the market makers, when the traders get inventory one way or another, either short or long or anything, you see these huge spikes. So you wind up having this, what I call a bifurcated volatility structure. A lot of long, quiet periods and then extreme spikes and then quiet periods again. To me, that's a combination of both the sentiment and the kind of the relatively small door people are trying to go through to liquidate their trades. And so those have been the drivers over the last week from my perspective, at least. So.
And certainly want to get to the consensus in a little bit as well, because go figure, all the true believers get together and the price goes up. It's got to be some correlation there. But it has been kind of fascinating. Are you one of these believers? And a lot of people talking about the halving effect and how that's going to obviously impact the supply, and that's kind of maybe why the worm seems to have turned here. Or do you think it was just kind of these near-term developments that you were talking about?
I feel like it's more a near-term development, and the halving thing, again, provides an ambient bid to the market, but nothing that's a catalyst to what kind of volatility that we've seen last week. So
certainly has been some vol going on out there as well. I'm curious, too. You guys play, obviously, doing some size execution in the crypto space. One of the interesting things, we hear a lot of back and forth about this in the space, is what we're seeing out there and what we're hearing from the institutions when it comes to crypto. I've had a lot of people come and tell me that the institutions are saying one thing publicly, which is that they're not into it that really, but behind the scenes, they're staffing up and they're getting ready and they're doing more things behind the scenes to get ready for that moment when they want to pull the trigger on crypto. I think the current upturn certainly hasn't hurt that, right? It's made it a little bit sexier to walk into the office and say, I want to trade these Bitcoin things when they're around 8,000 than it does when they're around 3,000. So that certainly probably hasn't hurt it either. But I'm curious, what are you hearing from the size players out there? Did you see maybe demand tail off towards getting into Q1 when we're at the tail end of that long bear market where they kind of just exhausted with the space? Are you hearing that people are getting back into it? What are you seeing out there on the institutional side there, David?
I would guess that anyone who's in finance or anyone who owns a bank or anything is looking at their crypto strategy in one way or another. So, and without naming names, you can imagine we've talked to a lot of people.
We can name names. It's just you and me talking, Dave. That's it. There's no one listening. It's just you and I, two guys in a room talking about crypto.
Okay. Well, anyway, we've seen a lot of folks who've come and they're developing a strategy, but it hasn't quite congealed yet, and they're ready to launch it. And so I think they're in that kind of wait and see phase. But that wait and see phase is probably, an important time in the market. That's really, they haven't necessarily jumped in, but they're certainly putting their toes in.
And you guys trade a lot of the listed futures, not CBOE anymore, obviously, but yeah. CME. Do you guys trade a lot of those?
We trade a lot of CME futures. That's right.
And I'm curious, speaking of the futures and the institutions, we saw a lot of hand wringing when CBOE decided to delist their contract. Saying, "Oh, that's the sign that institutional demand is done." There's no institutional demand because CBOE couldn't make it work. I'm curious, what are your thoughts on them kind of getting out of at least for the near term, getting out of the crypto business?
Well, the first thing is, if there was no institutional demand, the Merc wouldn't have traded $1 billion of notional on a week ago today, and so I think there is institutional demand. To me, the CBOE products seem more geared at retail. And less at institution. I think from a professional side, it was a little bit of a challenge necessarily for us to get onto the platform because CFE is not immediately conducive for us as non-permit holders to get on. The CME, on the other hand, is quite easy for us. We trade a lot of CME products, so for us to trade Bitcoin is natural on that platform. So we always thought the CME was going to be the one that really took off. We did trade the CFE, just the contract size fit us a little bit better on the CME. The liquidity has always been pretty good on the CME, so we've been trading on that platform mostly.
A lot of people were excited in the early days, at least, that the one coin, particularly when the Bitcoin was 20,000, one coin versus 5, that was a big difference, right? These days, the sell-off helped a little bit of that, certainly. But you're right. That seemed like there was a little bit of headwind behind that one, and it kind of tailed off. I think we have a listener question about the same subject, so I think we'll probably get to it again here before the end of the show. Before we roll out of this segment, because there's a lot trading right now I want to get to too. But I'm curious. I like having guests like you on here, David, because like I said, you come from a more traditional, at least for Chicago, traditional finance background, which is options. So that comes from a certain mentality on the exchanges and everything else like that. Now we've certainly seen it. Chicago is probably the best example of this, the meeting of the mindsets, if you will. The crypto mindset, which is, predominantly out there in the tech land, a little bit libertarian leaning, shall we say, a little bit of a stick it to the institutions type of mindset. And you have the more traditional financial mindset, which is, about markets and regulation and all the other things that we've come to know and love here in the space. And it's been fun for me watching these two worlds come together. Sometimes they meet the minds and good things happen. Sometimes they clash. So it's kind of been fascinating. You come from that background, and now you're at a predominantly crypto trading firm. I'm kind of curious, what's your thoughts on the evolution of those two mindsets coming together, clashing sometimes, maybe working together sometimes? Has it been as fascinating for you to watch as it has been, I should say, for me, David? Right,
completely. I think in the U.S. we need more regulatory clarity, right? And so we want to see more regulatory clarity, and it would help us grow our business. On the other hand, you look at some of the emerging technologies and companies. Had Uber fully complied, with all the regulations in the taxi world, would they have succeeded? So we comply with everything. We're in compliance, but the technologies evolve on their own effectively. And it's been interesting to see how the technology has evolved, in the absence of immediate, clear regulatory guidance, is what I'd say.
I had someone telling me today that the regulatory space in crypto is more of a forgiveness rather than permission type of mindset, where it's kind of almost exactly the opposite. in the traditional financial markets. Well, speaking of those markets, let's get to it. A lot trading these days. Let's dive right into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. This is indeed the portion of the program where we tell you what the heck is trading, and a lot is going on out there in the world of crypto as we're making some changes here in the studio to bring you better fun stuff here. But yeah, it has been a hot week out here in crypto land, certainly since last episode. We're up well over 100 handles coming into showtime. In fact, the rally has continued while we've been talking here. I think we're talking up the market here, David, because coming into the showtime, we were at around 79.14 or so. That's up a little over 100 handles. We were at about 78.07 this time, our show last week. And then coming into showtime now, the futures are over 8,000. We're hovering in the spot close to it. Actually, just got over 8,000 themselves as well. So we're a little bit over 8,000 as we speak. So up another roughly 100 handles since we started talking here. So a lot going on in the world of all things Bitcoin. If you've been watching, of course, over the past week, you know this is kind of our third or so, and maybe even fourth now, run at some of the upside here. We saw a few attempts to kind of break that 8,300 level unsuccessfully. I know a lot of the technical guys have been watching that, waiting to see that 8,300 level on the upside. Seems to be where everyone is fixating right now. If not, they're worried about drops down to lower levels. And, of course, people watching, of course, see if we can make that very, 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 very contentious 8,300 level. We've tested it a few times, listeners. So far, can't hit it. Maybe today, if this movement continues at the current level, we could be threatening it by the time the show is done. So it should be interesting. David, I know you've been in here talking to me for the last couple hours here, so I've taken you away from your screens. But I'm curious, just in general, maybe about today's activity, or maybe even coming into the weekend. Anything catching your eye? I know you kind of mentioned the consensus. We're going to get to that in a little bit. But what's been catching your eye out there in terms of activity recently out there in all things Bitcoin, sir?
Sure. So the most interesting move of the week, I think, was last Thursday night, and I think it happened around 10 o'clock Chicago time. And Bitcoin was trading in the 8,000 level, and there was apparently a 5,000 lot market order that hit one of the exchanges, and there were a lot of long liquidations, knocked some of the exchanges down to as low as 6,300.
That's just a terrifying. You say 5,000 lot market order out there. That just to me sounds terrifying. You know, market order in any space it can be terrifying. Market order in crypto is a different beast entirely. It
is, and it was, and it really knocked the price down quite a bit. The amazing thing about it, and one of the tip-offs for us, was the resilience of the market when it got to that level. It immediately popped back. It was what we considered it a flash crash. If you know, I mean, and people came in and got into the market fairly aggressively and brought it right back down to 7,000. And then over the last week, it's climbed back, or the last 4 or 5 days. To me, that's symptomatic of the fact that there is this ambient bid in the market that is, as you have a V break, it's been coming back. Very interesting from our perspective. Also interesting is the actions of the exchanges at the time. How far they went, how quickly the whole thing happened, how it unwound, how quickly it wound up coming back. That to me was also one of the other fascinating elements of the market microstructure. So that combined, then there was the 60 minutes rally that wound up getting, I think the high was 83.50 thereabouts on Sunday night, and then came right back off. Further confirmation that there's a sentiment bias within the market that seems to drive the market, and now it comes right back. I think the low was 7,600 or something, and now here we are trading 8,100 again. Again, there's just this continuing ambient bid. So, my observation is that when you see opportunities like this, they typically persist. And so, from my perspective at least, I'm super bullish on Bitcoin over the next 3 to 6 months, especially.
It does seem like it has I wouldn't maybe established the floor is a little bit much, but it does seem like you're right. I think that inherent latent bid is kind of lurking out there. But you mentioned kind of trading on the weekend hours. We've seen that a lot. That's a very popular metric in terms of how much volume is going up over the weekends. How has that been for you guys over the last month or so as this rally has persisted? Have you seen decent volume, decent trading persisting over the weekends? Has it kind of dried up? What's it been like over the weekends versus your traditional trading week over here? Break it down for our listeners.
It's a little hard to adjust to the 24/7 nature of the crypto market, and
that's my next question. Coming as an old options guy, you had a set time frame, right? And that's no longer the case.
Right. We have a full coverage on our desk, so I feel like we've got it the time zone and the times covered. But that said, it's always moving. Crypto never sleeps. That's for sure. So, the weekend. The weekend doesn't trade quite as much, but again, the door is fairly small on the weekend, and you'll see a price move quickly. And the Sunday night was a good indication of one of those times. So,
yeah, it has been interesting to watch the volume and the volatility of late. Speaking of that volatility, let's break some of that down. All this data, courtesy of our friends over there at Skew. Check them out. Great stuff. They were on the show not too long ago. A lot of great data over there. Let's look at the volatility out there. It was pretty high last show. This is, of course, 30-day realized now, listeners. It's even higher, as you might imagine, this week. We have seen a little bit of price action up there. So it was jumped from about a 57 and the 30-day realized up to over 80, 83 coming into showtime, which is an impressive level. Also impressive out there is the volume we're seeing out there. Again, this is from Deribit, but you can kind of pick your platform of choice out there. And remember, they don't quote it in contract size, they quote it in kind of value traded, which is a little bit different beast coming from the traditional markets. But you get used to it after a while. Listeners, and seeing it on, remember for recently coming into this big upturn about a month ago, we saw volumes fairly light, 10 to 20 million range over there on Deribit. Now we're seeing much higher than that, 35 million on the 13th, about 34 million on the 14th of May, nearly over 30 million, just about on the 15th, 52 million the big day of the last week on the 16th, and almost 45 million going up on the 19th. So it's been pretty active out there of late. Worth noting here, looking at how the vol is breaking down in terms of cross the term structure here. May, as you might imagine, still active. Also looking here, they obviously have some weeklies. They have expiring at the end of the month contract here as well. Then it drops off a bit down to about a 95. Again, this is the implied out here going out to June, and then it falls off a bit all the way down to, dare I say it, 90 and below, listeners, for September and beyond. Dave, coming from an old school options background, has it been interesting for you to kind of watch the nature of the volatility and how it's shaping up out here in Bitcoin? Because for a while there was very volatile, and then it kind of tapered off towards the end of last year, beginning of this year. I think it was around a 20 or so. It wasn't really very volatile at all. And then it kind of started kicking up again. Has that been kind of interesting for you to watch as a shall we say, a seasoned volatility trader?
Completely. Again, getting back to that kind of bifurcated nature of the volatility, extremely volatile in short periods of time, and then fairly quiet for a longer period of time, and that's been the theme throughout the last 6 months until recently, in which case the overall volatility level, really popped. And so, one thing that we think about as Delta One traders, and ultimately we'll want to do as option traders, is how do you capitalize on that? How do you capitalize on what are the things you want to look at that you can capitalize on a move that kind of spikes up out of nowhere? And so, I don't have a lot of great answers for you, but that is one of the questions we're asking quite a bit. From an options perspective, that would seem to be a fairly simple thing to do. Buy tails, for instance, and hold on to an iron, short an iron butterfly or what have you. Those are the kinds of things that would seem to make sense to me. To kind of be back spread or whatnot. So I would think that would be a phenomenal place to way to trade options on these kinds of markets. So.
Yeah, we are seeing a lot of tail action, in particular the calls. Calls leading the dance out here right now, David. You probably would imagine, given so much of the upside testing and retesting that we've seen of late. In fact, looking at it right now, most people look at put to call in the crypto space. It's call to put. A little bit different beast, and it's very high right now, well north of 75%. Just looking at this data, this chart here goes back to the beginning of the year here, and it's only been north of 75%. Looks like a handful of times, maybe 5 or 6. So rarefied air here in terms of how many calls are out there against the puts. And in terms of, people always ask us, where is the action out there in terms of the options? And it does seem to aggregate, as you might imagine, the largest open interest across some of the open strikes. But 6,000 is actually leading the dance right now, listeners. So those of you out there who are concerned, maybe it's all upside all the time. There clearly is about 5,000 contracts there on the 6,000 strike. And then followed second by 10,000. So there still is a lot of upside call interest. I think I have a listener question somewhere along those lines with terms of where things are leaning there as well. But interesting stuff out here. Upside, and a little bit of downside here. Leading the tape here on Deribit. Same thing could be said for the June skew. Remember, we've been looking at the June skew for a while here, listeners, and it's getting pretty crazy out there, as you might imagine, as bids are coming in for the puts shy of 6,000 and also up to the calls, 10,000, bringing the vol up there to astronomical levels, shall we say. It's hard to talk vol, the contract that's getting that near term, but still interesting stuff. Speaking of interesting, we talked the futures a little bit earlier. As you might imagine, today is a pretty active day out there for the futures over there on CME, as they're threatening now 8,100 in the futures. They're up 240 handles today alone. Nearly 7,000 contracts on the tape just in that front May contract, listeners, with another 500 or so coming up in the rest of the term structure. Remember, that's a 5X contract, so you're talking 35,000 coins roughly changing hands. A pretty good day, pretty good month overall, David, for the Bitcoin futures here with ADV up 263%. So I'd imagine that's kind of a music to your guys' ears over there, trading all the Delta One stuff. That these futures continue to resonate and grow.
Oh, we love it. It's great. It's great for the industry, great for the exchange, great for the traders. We love it.
Speaking of places that love all things crypto, you you went to the Consensus Conference, am I correct?
I did, yeah.
And that's been a big driver, as you kind of alluded to earlier. We had the Consensus guys on here on this show in the past, but it's been a little while. I've never been to their event myself. It is kind of a meeting of the mind, shall we say, of the true believers, the diehards in the world of crypto. I'm curious. I think we have a listener question about this too, so I'll just credit them now. We'll bump them up. This question comes from Tan Vela. They want to know, what were your thoughts on the Consensus Conference? Any interesting takeaways? So, David, I will put that to you. You've already said that you think it's one of the key drivers for this price action recently. So what were your thoughts on the event? What were some interesting takeaways from it?
Sure. I was there a year ago when crypto had made its high, was on its way down, and then came back. So this is my second year.
Probably a markedly different event a year ago, I'm going to say, when in the teeth of the downturn.
Well, yeah. I mean, the irony is the underlying price is probably higher, but the sentiment was much lower. Yes. And now we got into a situation where the underlying price was lower, but the sentiment seemed higher. I would say the most notable observation I have about it was that all the projects that were abstract about a year ago, and I'm not necessarily talking about the cryptocurrencies necessarily, but the projects, for instance, Foam or BAT, or some of these things that are really going to work in the real world, are that much further down the road now, and they're actually starting to take shape and really look like a real enterprise. That's true about a lot of the other companies that are operating in this space. So for a year ago, they were all business plans and abstract ideas, and here they are now approaching production or in production or fairly well along in the production cycle, and it's starting to look like a real business ecosystem, to use a kind of an overused word. So when I was there, I was impressed with how it had kind of come out of this, dreamy euphoria of the year before to kind of a practical reality of 2019, and that was my biggest takeaway. Another takeaway, one thing that was really a topic of discussion with a lot of people I talked about, was this concept of BitGo, the custodian, becoming a facilitator, right? And if you think about the ramifications of that particular idea, what does that portend for the entire financial industry 5 years from down the road? The custodians are basically the Fort Knox of digital assets. And Fort Knox getting into the facilitation business has got some real ramifications, not just for trading, but for anyone who's operating within the kind of the financial sphere. Everybody was talking about it after BitGo announced it, and maybe it was because we were focused on the exchanges and people who may be potentially affected by it, helped or hurt or whatever. But that was a big topic of conversation. Another topic of a conversation was Ron Paul, and he was up there I believe he called Brad Sherman a thug at the conference. So, but there is this kind of anti-crypto mentality that is kind of seeping into the political realm now, and I don't want to call it populist. I'm not quite sure what it is, quite frankly, but I think it's something to keep an eye on. So there are a lot of themes that were out there that were starting to express themselves that I hadn't seen before. So
I like the way you summed it up, the Dreamy Euphoria last year. I think that's a good way to describe some of these events in the crypto space, a lot of that. But I'm glad to hear a little bit more tangible developments here this year. I think custody, that seems to be, it still is it's the nagging issue in the space. Whenever you talk to the size institutions or other size players, they just they don't want to. It's not a concern you traditionally have, and so you don't want to have to deal with who's going to hold on to this, where is it going to be, is it secure, all these other issues. So yeah, if someone can find a way to ease that process, I think for the institutional players, or make it a little bit more user friendly, that sounds like that's going to be a big winner. So was that kind of your big, maybe tangible takeaway from the conference? Was that, David?
Well, one of them, yes, yeah. Everything is user friendly. I mean, and I think we're very concerned with KYC AML and making sure that we're in compliance with all the regulations, and to some extent the custodians do that already. They do a really good job of it. So, when we do it, it'll be redundant, but we'll be assured we're trading with good counterparties. Things like that are the concerns of ours when we're trading with people. The ease of movement of assets, for instance, if you're within a custodian and it's an off-chain settlement and you're moving it within a wallet, within an omnibus wallet within that custodian, how much easier could it be to transfer an asset from place to place? So those things, when you think about the simplicity that could bring to the whole industry, I think that's a very compelling subject. So that was a big topic of conversation for us.
Speaking of compelling subjects, you mentioned earlier a lot of the price action over the weekend, and a lot of the talk in the crypto space has been on the 60-minute segment. I think a lot of people were prepping for a bit of a hit piece. That's kind of I know in the option space, whenever the quote unquote mainstream media talks about it, everyone's always worried about yet another hit piece. I think crypto is is bracing itself for a similar treatment out there, and yet. It didn't seem like it was, I think, quote unquote, that bad. It really wasn't. They talked about a lot of interesting. They termed it Bitcoin's wild ride, kind of an interesting point of view. They kind of they set it up around these early lawsuit days. They of course hit on the thing everyone has to hit on, which is of course the guy who spent 10,000 Bitcoin on a pizza. So they always have to bring that one up. That's kind of the I guess the bugbear lurking out there in the crypto space. But I guess my takeaway, at least mine was, maybe David you agree, maybe you don't, that it wasn't maybe the hit job everyone was expecting.
I to the contrary, I think it was a pretty positive piece. Right, the woman from MIT Media Labs, in particular, really made a case for this being something 20 years from now that people are going to look back on and a groundbreaking piece of technology. So from my who could be more who could have more credibility than MIT Media Labs, right? It's like probably the leading technical design firm in the world potentially, and I think so that was very interesting. Interesting, of course, they brought the woman on from Federal Reserve, Lael Brainerd, and she of course had different concerns about it. So I thought it was fair that they presented both sides of the issue, but interesting that they ended the story with the woman from MIT. So.
Yeah, when all the Bitcoin haters out there are saying it was a Bitcoin infomercial, that maybe it wasn't the hit piece that people were expecting. Speaking of expecting things, people have been expecting an ETF in this space now for quite some time here, David. A lot of people come in, they write into us, and they say, hey, is an ETF, is that the linchpin that's going to get things going maybe on the retail side, get more institutions to play ball? Do we really need an ETF in this space? We took at least maybe not a step back, we just delayed a step forward here in the space coming in this week with the SEC once again kicking down the curb their decision on the upcoming ETF here from VanEck and SolidX Partners. It's the one, of course, it's the CBOE plan there as well. And they've decided that they haven't reached any conclusions yet. So what that means is effectively they're delaying. That allows them to delay all the way until as late as October to get a ruling out here. So this is not exactly, I don't think, the ruling that the hopeful were looking for here, David, but also it's not a no, right? So no is a good news, I guess. Does this concern you, or do you not really care about the ETF issue in the space?
Oh, no. I mean, I'm looking forward to having an ETF to trade. But my personal view is that no one wants to be the person who says yes. That's the problem. And so I don't think the existing commissioners, want to be the people who say yes, potentially upsetting some apple carts out there. So I think they are kicking the can down the road, and I think it'll get to a point where they feel like they have to do it because the rest of the world has gone past and allowed ETFs and other tradable vehicles that the SEC is kind of hasn't made a ruling on. So I think it's inevitable. It's just a matter of time, and I think the more important point is they didn't say no, as you just said. So.
Yes, there is some concern. I was talking about that with someone today, that the rest of the world is starting to lap us a little bit on the regulatory front. We're obviously a little bit reticent. I think post last year, post VIX-ocalypse, they kind of clamped down on everything, and we haven't really seen much of a lightening on that front. So hopefully, they didn't say no, so hopefully that's the glass half full way of looking at that as we keep on rolling into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, a portion of the show where we break down everything else outside of Bitcoin, even though, except for this beginning, where we talk about the market cap. Remember, these market cap numbers could be a little bit dicey. I want to get your opinion on that in a little bit there, David, as well. But looking at the market cap numbers here, Bitcoin, of course, still leading the dance, 140 billion out there. Number 2, ETH, about 26, a little bit north of 26, closing in on 27 billion. Number 3, good old Ripple, XRP, 16 million. Remember, ETH and XRP were jostling with each other for second place for a while there. Ethereum is now pulled into a healthy lead. Number 4, Bitcoin Cash, a little bit north of 7 billion. Round out the top 5, good old EOS with about 6.33 billion or so out there. It's been a lot moving out here, David, this week, as you noticed. We've been waiting. A lot of people have been waiting. There's been a lot of love for XRP out there, a lot of love for Ripple out there, and they've had some headwinds of late. All these other competing coins coming into this space, maybe laying down on their price action a little bit. It seemed like they couldn't really get out of its own way for a long time. This week, finally did, rallying from that 30 to 33 cent range. It's kind of been locked in for a while, all the way up to 40 cents coming into the show here today. Still north of 40 as we're speaking. Also seeing ETH, the big winner this week, up about 25%. It was right around 200 on our last show, listeners. This time up to about 250 or so. So a big move out there in ETH. We're seeing record volumes out there as well. The two most popular ETH markets on Coinbase, ETH Bitcoin, obviously, and ETH US dollar combining for about 3.7 million units. That's the highest they've seen since December of 2017 in terms of overall volume out there. Litecoin, kind of the odd duck of the bunch, pretty much unched, still around 91 from where it was a week ago, about $1 different. Everything else has been moving and rolling, including a Bitcoin Cash up about 20 odd handles. Actually, more than that now. It's up to 422. It was 416 coming into Showtime. So up about 26 handles out here. So a lot's been going on here in the altcoin side of the space here, David. You mentioned you trade some of the top 5. What's been really catching your eye out here in these kind of top 5 ones? And you also kind of mentioned at the top of the show some of the more esoteric ones out there. Anything catching your eye out there as well?
Sure. So it took a while for them to wake up, didn't it? I mean, it was, we had this kind of pop in Bitcoin.
They were kind of languid for a while.
They were languid for a while, exactly. And so the last leg of the move has really been kind of a catch-up move from our belief. And I do think that the bid in Bitcoin really provides an underpinning to additional bids out there. As I mentioned, we're particularly fans of Ether because of the nature of the contract, and that's had a phenomenal move, as you said, the top number 1 performing altcoin out there. So I think that's going to continue. I think that some of the other the ERC20 tokens are going to rally on the back of that. I think that I think part of the problem Ether had over the last year was that it was a victim of its own success, right? You have all these projects that are based on that as a currency, yet the problem was they had to pay the bills and keep the thing running. So that I think that provided a continuous sell to the markets on Ether. that appears to have stopped or slowed down, at least, if nothing else. And that's going to breathe a lot of life into some of these projects that maybe were lacking for funding, and when ETH was trading $80 or whatever it was doing, right? I mean, I don't know what, and there was a lot of coins that weren't worth anything, and there were a lot of bad ideas and a lot of things that were probably not done right in 2017, 2018. But there were some really aspirational, brilliant people coming up with great projects in the space. And those things, I think, are going to shine through, particularly in the next leg up. So, I mentioned a few of them. There are a bunch of other ones that are out there. I just think that traders will do well to kind of really dig in and look at these projects and see what they're doing and kind of separate the wheat from the chaff, because some of these could really take off if they get the traction that we think that they'll get. So
let's run down a couple of those again, because then we talked about them at the top of the show. But I always love when people bring on their choice of altcoin, because it's always different every week.
Well, I think everyone who is a cryptocurrency trader should probably get rid of all their Chrome and Safari and everything and download Brave software. So if you're not familiar with it, you should get on and take a look at it. The concept of protecting your identity at the level, the security level, is something that's compelling to me, and I think should be compelling to anyone who's concerned about privacy, et cetera. So that's traded on Coinbase. It's had a wild ride recently. It's gone way up and down, and but I think the BAT is a kind of a cool token. I'm not going to make any kind of prediction about its price, but the project to me is great. Golem, we got our AWS bill yesterday, and
I love the name at the very least. Some of these the token names, Tron, Golem, they really get out. I love some of the names they throw out there.
Right. Golem. So and what it does, it basically provides kind of decentralized computer processing across a lot of different a lot of servers around the world. So you could rent server time or something. It costs about 10% of what AWS costs, right? So and it's had some problems. I understand that, and it's a very aspirational program, but it solves a big problem. I mean, AWS is expensive, and ultimately we're going to have servers everywhere, not just us, but everybody. And is it a breakthrough concept? I don't know. The ones I was talking about before, the proof of location ones, those to me are particularly interesting as well. A lot of them are based on Ethereum, and so they're gaining a little traction by virtue of the fact they have more capital in their account, and they can expand more rapidly than they were able to. All of those things, as Ether gets a bid and continues to go up, those things are going to kick in with it as well. So
a rising tide lifts all boats out there. There are so many fascinating. We only have one segment here, but we could easily do many hours on the legion of different fascinating endeavors out there in the altcoin space. Meanwhile, though, we have to keep on going. I want to see if we can get some of our listeners here on the show with a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. We love your questions. You guys send in a ton. We'll see how many we could squeeze in here at the end of the show. We already cheated. We got one up here about the consensus conference. Let's keep on rolling here. This is kind of what we were talking about a little bit earlier. Eli Murphy wants to know, the SEC shoots down another ETF, yet volume and price action remain robust. Does this just put the lie to the notion that we need an ETF for this market to become a quote-unquote real boy? Well, I caution, they didn't shoot it down. They kind of just delayed it. Right, Mr. Murphy there. So that's at least charitable news. But he does make a good point here, David, that, yet another, let's just call it delay in the ETF space. And it doesn't seem to be hurting the price action here today or the volume. So maybe the off-stated reliance that we have to have the ETF to make this a real marketplace, maybe it is a little overdone. What do you think? Do you agree with Eli here?
Yeah, I think it's completely overdone. I mean, just look at the futures volume in the last couple of weeks, and you'll see that people are trading other vehicles, be it cash, futures, whatever, and they're maybe we don't need an ETF to make it a real contract. I mean, I think it is a real contract. There's enough volume and market cap to justify it and call it that, I think. So
So you say it is a real boy, right? We don't need the approval.
We don't need the approval.
We don't need your approval,
right,
Eli.
Right.
Thanks for the question, though. We do love you out there. All right, let's see. Next up, we've got Valar this thing is the Game of Thrones. Valar Morghulis, I think that is, or Morghulis, one of those. Obviously a Game of Thrones fan here. They want to know, what's your favorite data source for crypto? The freer, the better. Thanks for your fine program. Glad to hear someone coming at crypto from the options side. Well, you're welcome there, Mr. Valar Morghulis there. I mentioned at the top of the show, we use SKU a lot. They've been on the show. They're not a sponsor, and we just love their data, and it's great, and it's free. So that kind of meets all of your requirements. They have a ton of data on the futures and the options, all that stuff we were talking about before, the SKU, the vol, the term structure, everything, all that came from the SKU guys. And it's free. So get over there and kick the tires before they decide to lock it down behind a paywall and do something with it, because it's great data. David, I'm sure you must be familiar with it. Do you use the SKU stuff? And if not, or maybe you have something else you use in addition to that, what do you guys use over there at Hehmeyer when you're slinging all the different assets?
Sure. We don't use SKU, and I'll take a look at it now that you mention it. We use Coin API, which is a good data source for a lot of things, and it's not free, unfortunately. There may be a free version. The one we use is not free. We also record all the data from the exchanges that we trade on, and kind of keep them in what would be the kind of the native format, and then compile them and keep them in our data warehouse. So we use those data sources as our kind of
back testing engine, that sort of thing.
Exactly.
It's interesting. You're right. It's always fun to see what people use to trade out here. And it does seem to be a bit of a mindset in the crypto space that they like the data. They don't really want to pay for it, right? They don't come from the traditional siloed market data world where I should be paying in the exchange tens of $1,000s a month for this one data feed. They want it all and they want it free. So he's definitely summarizing the crypto space. But I think the SKU SK3W is a great free data point. And the one you just mentioned, if you want to pay a little bit, might be an interesting one as well. Here's an interesting one. We kind of touched on this a little bit earlier, but we can get to kind of your full thoughts on it. This comes from Albert. Let's see here. He wants to know, why do you think the CBOE futures never really caught on? This is kind of an interesting question, David. I've heard a lot of people coming in here talking about different things, about the auction, about the size, about other different things that never really resonated with a lot of the large institutional players in particular. I'm curious, what do you think was it that really was the stumbling block out there for the CBOE futures in particular? Was it just the size, or was it something else?
I think the size is definitely part of it. I think there are a lot of retail products out there. Obviously, you can go on and buy Bitcoin almost anywhere and buy it in a single piece. So it competes against those products. I think I think the Merc really put a lot of time, energy, and money into their product, and I think that's one of the reasons it was hard to compete. They built up a liquidity pool that's been incredible. I mean, you look at the size of the Merc liquidity; it's probably one of the most liquid, contracts in Bitcoin out there, if not the most liquid in some respects. So I think the size of the liquidity, for a lot of people, there's a network effect on trading, right? So Globex is clearly the nexus of the world when it comes to futures and futures options trading and whatnot. So it's hard to compete if you're a smaller futures exchange. So that's a natural flow. I think that's another thing that kind of, another reason it kind of didn't do as well as it thought. But it catered to the institutional brand less than the retail. Slightly different demographic of trading than the CBOE did. All those are the reasons I think it didn't do quite as well as it. The CBOE or the CME wound up doing. So
speaking of the liquidity, this has been a hot topic on the show of late. I'm sure you've seen it. Of course, the data out there coming from Bitwise, it was pretty much in relation to the futures and how important and impactful the futures are in the space. A lot of people have said they aren't that big of a deal because there's so much going on in the spot market, right? And Bitwise came in and said, not so fast. Actually, their numbers, somewhere around 95% of that volume, they termed to be maybe duped or just kind of outright fake. And so that was obviously a pretty contentious data point. I'm curious, David, what are your thoughts on that and their allegation out there that so much of the volume, the market cap we see quoted out here all the time is really kind of fluff?
I agree with his basic tenet, which is the Bitcoin market is way more efficient than people think it is, right? And if and I think that's in the summary of the Bitwise presentation. As you go through some of these exchanges, he presents a very compelling case for some of the volumes to be overstated, and I can't disagree with him. I would say to narrow it down to the number he did, I think it's 12, and they've been kind of called the Bitwise 12 exchanges now that are out there. I think that's probably a little bit narrow. I think there's more volume than that. But I do believe that his fundamental kind of premise, which is that the Bitcoin market is far more efficient and than is generally known, is really fundamentally correct. So
you're down with most of the Bitwise data then. I like that.
I'm
Bitwise
down
12.
With it.
They've stamped their imprimatur across those exchanges, and those are the shall we call them the legit venue. Speaking of questions, we had a lot of great questions coming in from you guys. Unfortunately, that's all the time we had here on the old crypto questions, and indeed, that's all the time we have for the crypto rundown this week. There's that music. Okay, but before we go, let me check back in with our guest here. If you're intrigued, you want to learn more about what they're up to over there, maybe you just want to hit them up with some questions or comments. David, maybe something in the course of this very, very far-reaching conversation we had, you say, I forgot to mention that. Or maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect from you guys coming down the pike. Now is the time, sir. The floor is yours.
Well, we're expecting a big 3 to 6 months going forward. So, we would love it if anyone out there would want to take a look at the Hehmeyer cryptocurrency index. You can see it on our website, www.hehmeyer.com. We have a regulated commodity pool that's out there. I'm not sure if we're unique in what it's doing, but it's definitely something worth looking at. So if you feel like you want to get involved, take a look on a fairly low cost basis and feel like you can hold on to the coins without having to do all the management yourself. It's a perfect thing for somebody out there to take a look at.
Why don't you spell that for them so they can find Hehmeyer.com out there, sir?
Sure. That's Hehmeyer, HEHMEYER.com.
And also, while you're at it, give them a follow over there on the old Twitter machine. It's just at Hehmeyer LLC. A lot of great stuff coming out there throughout the week. Well, David, I'm glad you could join me here on the program today. It has been a fun journey through the world of crypto, and we'll look forward to seeing how the index and all these altcoin you mentioned and everything else you touched on, how it all unfolds in the crypto marketplace here in the coming months, sir.
Great. We're looking forward to it, and let's put your seatbelts on because I think it's going to be a busy next 6 months here in crypto.
Let's hope that's the case, because certainly it makes for a fun show when that's the case. And on behalf of David, I want to thank all of you out there for downloading, streaming, subscribing, and of course sending in your questions. Keep them coming, and we'll see you next time for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.